Hi everyone, this is Cal, and it's been a while since I do my last video. In fact, it's a 1 month ago. Now today, I want to share a lot of stuff with you because we see that the big boys, the smart money, are selling, and the S&P 500, there's a very good chance we may see going down below 6,800. And of course, Bitcoin. Everyone knows that I'm bearish on Bitcoin. I've been calling for sell, and this time around, I foresee it may actually drop to $57,000 again. So today is a must-watch video. Don't go away. Now, before that, disclaimer apply as usual. Do your risk assessment. Yeah. Okay, let's go into details. Now, the China market has been selling the US treasuries. We know that for sure. They have been doing that. And in fact, itself, the 2-year yield is now at a very high level. Now, before we go to Bitcoin and the stock market, the gold market is something that we know everybody went crazy with gold recently and got caught. Many accounts were burned over the last 2 weeks because of volatility in the market. But now let me share this with you. Now, the People's Bank of China, they have already have 34.19 million fine thrown ounces of gold by the end of January. And that's another increment of 74.15 million. Okay, so the thing is this. Now it is very clear that despite what happened in January, the Bank of China has been buying gold, and that means that there could be more upside coming in. All right. So this is something that's very important because back then when it was 4,000, I tell everyone about this. People laugh about it, and we go to 5,000, everybody chase into it right now. So if you look at the chart right now, you can see that the China monthly gold reserve has been climbing while they have been selling away this foreign, US treasuries. Very clear. The funds went to gold. And we all know that the Shanghai Gold Premium is now trading actually way higher than the current price of the market right now. So is that a sign, an indication, demand and supply? We're not too sure, but definitely this is a good sign for people who is buying gold. Now, there are people who are really starting to turn bearish on gold. I will tell you, my friend, be careful, okay? Just be careful. I can't promise you that gold will not will go all the way up, but I believe that the long haul is definitely towards the north side, yeah? Now, if you look at my indicator, it's very clear that when gold plunged all the way from the high of 5,500 area, it went all the way down to 4,400 area. That was where I called for buy on gold. I feel that the boys are definitely buying based on my indicator. We know that this is definitely oversold. And of course, gold went all the way up. And now we can see it's very strongly resisted around 5042. That is my KCL level. Now this we can see right now that in the weekend data, gold likely will trade up by $20. So gold will likely open above this area. So watch out for this. It may actually push a sign. Now, of course, if gold continue to go up the next 2 to 3 weeks, we may see gold going back to the 5,380 area, okay? But one thing to note, if the stock market do come down, then gold will sell because that is how usually the players will take the gold assets to sell to basically cover their margin calls, yeah? So there could be a possibility of something like this where gold goes up first, the stock market push it down, then after that, gold shoot all the way up, right? I'm not too sure what this happened the whole month, but that will likely be the directive that I believe may happen. Okay, so guys, watch out for this. Yeah. Okay, that is gold for you. Now, we all know that many young traders are now making money from the stock market and things damn easy to make money, and they feel that now they are the top of the world. But that is always the case when the market is about to peak. So we can see right now the strongest retail flow to equity. We can see that means a lot of people, the equity traders, are now bought by the retail. As a matter of fact, the Bank of America Bull and Bear Index now is up by 9.6 points, a 20 years high. My goodness, 20 years. This is really incredible. One of the highest in 25 years. And usually when you can see that this Bank of America Bull and Bear indicator is really at the top level, extremely bullish, and the main buyers are retailer, we know that could be the end. And of course, you can see right now, the margin depth is going crazy. Now you can see the IGV from the IGV retail net purchase, they've been buying a lot for equity. All right, that is a good sign if you tell me that the economy is doing well. But at the same time, we can see that the margin depth is also increasing to $1.23 trillion. That means that a lot of retailers are actually borrowing money to go into the stock market. But the problem is this, guys. Look back again. The problem is now the S&P 500 is trading below the 8 days moving average. This is not a good sign and is strongly supported by the 21 day. Now we all know that this indicator whereby when it goes below, that could be a very serious selling. So of course, on the positive side, every time it gets supported, it rebounded, right? So yes, indeed. So many of my friends tells me that this is going to be a strong buy signal. But the problem is this, okay? The market is down for the entire week and it's now hovering at a very important support level, okay? And the main buyers are retailers, but they have been buying the last 2 weeks, but the market is not going up. You see, the market is really hanging at the top. So the worst thing to happen is that right now we see something very crazy. We see that the margin debt is going up, and we always know that when the margin debt goes very high, definitely there will be some selling. And of course, right now, the US consumer percentage of balance of 90 plus days delinquency has been increasing. So Americans are defaulting their debts. My goodness, they have been borrowing money, but they default their debts. So which means that the banks will be in trouble, right? So this could become a very big problem later. Let me show you now. So the thing is this, we all know that the Federal Reserve will not cut rate until May. All right, I've been very, very strong on this view because I told you guys that Jerome Powell will definitely not do anything now because he wants to protect his honor, if you ask me. So we can see right now on the Fed Fund 2, we can see that 90.8% of the traders believe that the rate of 3.5 to 3.75 will stay for March. Okay, that's another what about nearly 31 days from here. And the crazy part is this, from April, it's a 70.1%. That means that the market really don't think there will be any rate cut for the next 2 months. In fact, and the next 3 months. And the next one, the only one is in June. That is when the new Fed chief comes in. So I am going to be very sure that we're going to see something. The market will not find any catalyst to push forward, so there will be profit taking. All right, guys, usually when we see this, there will be profit taking. Now, of course, you will say, Cal, the consumer price index has been pretty good. The CPI numbers are down. Why the Federal Reserve is not going to move in? But we all know that, guys, recently the numbers are not really that accurate, right? We know that something is definitely wrong. I mean, food prices coming down cannot be, right? The energy price coming down, yes indeed, but that was all the previous month. But in January, we have been seeing crude oils going up. So to me, it's all right. It is very clear that food prices is one of the main things that's pushing up, but it's energy prices coming down that basically push the index down, okay? And of course, there's some egg prices coming down, but airline price went up. So overall itself is because all this thing tells you that the market is safe right now? I don't think so. As a matter of fact, right now, the S&P VIX Volatility Index, all right, is aging up, okay? It is aging up. Let's take a look over here. Let me bring the index to you. Okay, let's go. Now you can see that the VIX index has been moving up very steadily. Over the last 2-3 weeks, it's been moving up very steadily. And it's just a matter of time that could be a catalyst, something to burst it up, okay? So I believe they're going to see 28 soon, okay? Now I've been calling for buy when it's about 16, 17. We are up a little bit, but I believe that the big one will come very soon. And of course, when that happens, the stock market will usually sell, yeah? That's something that we must take note of the market. All right, so of that, at the same time, oops, sorry. Okay, you can see right now on the inverse QQQ versus the S&P P ratio. Now, one thing happened before is that the market, the QQQ has went up by from this point here as a resistance, turn support. This is the peak. Then it came down. This become a strong support. So you look at it right now at the top, we are up by about 55% from the low, which is at a higher level. And there's a lot of volume trading now recently. And of course, when this thing, we compare this with the S&P 500, with the from Goldman Sachs, this is the S&P cyclical adjusted PE ratio. We are not at a high, we're not at a cheap level. As a matter of fact, we consider it the expensive level, yeah? And of course, one thing to note that the 7 members of the Magnificent Sevens are now not doing very well. From NVIDIA to Google to Meta to Apple to Tesla to Amazon to Microsoft, oh gosh, the entire 2026, they have been selling. So the thing is this, if the Magnificent Seven are selling, why the S&P is holding up? Is it because the economy is doing well? I really beg to differ. And we all know that the equities are bought by the retails, because the retails are the one be buying all these shares. They felt it's cheap to buy, but the question is this, is it really cheap? As a matter of fact, right now, the Magnificent Seven are all now underperforming the S&P 500. And as such, in the blow up right now at the top maximum drawdown, we can see that over the last 8 sessions, 115 stocks in S&P 500 had declined by 7% or more in a single day. Now, the average drawdown where that happened is 34%. Right now, we are 1.5% below the all-time high. Now, the top 10 companies takes up 38.74%. Here are the companies. From NVIDIA to Apple to Microsoft, Alphabet, Amazon, Meta, Broadcom, Tesla, Berkshire Hathaway, and Lilly. So in short, right, we can see that this is the one of the strongest concentration in the S&P 500, okay? So any movement by this company, any downside by this company, which majority of the Magnificent Seven, this will definitely bring the S&P down drastically. So because of that right now, if you look carefully, the S&P 500 is holding very firmly at about 6,836, okay? My personal take is this will likely drop to 6,800. And if that happens, this will kick in some selling. And the selling should bring it down quite a fair bit. So if you look at it right now, we compare this chart and this one here. This is the sale of the heavy truck. They are collapsing. Now, this is not a normal sign. This is not a normal sign. Usually, we see this, we're going to get recession. Well, of course, if you say that this is the AI world right now, we don't look into that. But the question is this, if the AI shares are coming down right now, who is holding the S&P 500? And the question now is this, every time when the bank index touch this upper trend line, like the one you see right now on the screen, when it touches the upper trend line, there will be selling, okay? So I suspect that the bank share will be selling soon because of the high delinquency rate, that people are not able to pay their debts, and of course, the high inflation. So all this gives me that reason. Now, on top of that, we put the put and call ratio into perspective. The signs are showing in that the put versus call ratio is very high right now, and you can see every time when this ratio is at the top, there is some profit taking, okay? Not the crash, but profit taking. So I suspect that there will be profit taking coming in very soon on it itself, all right? So all these are telling me that you should be very careful next week. As a matter of fact, the S&P absolute return dispersion, is actually now at the high level. And of course, when that happened, Nomura Securities warned massive dispersion in the stock market has not ended well in the past. All right, and of course, the smart money, the one we'll be talking about, they are definitely exiting. Look at the big boys. They have exited all the shareholders, directors, affiliates, CEO, CFO. They are getting out. So the question is this, if the S&P is not moving, as you can see on the chart, while the big boys are getting out, the retail are going in. That is why the market is flat, if not down. So that is why you must be very careful, right? So I'm not saying that the market will crash. Please understand that. I don't think the market will crash, but I think the market will sell, okay? And the best thing is this, 9 more large companies has filed in bankruptcy over the last week. That brings the 3-week average to 6, the highest rate since 2020 pandemic. Now, in pandemic time, people are bankrupting themselves, we can understand. But with the economy, the stock market at 50,000, where Donald Trump telling you that things are good, how can this company be bankrupting themselves? And if they get bankrupted, the money that they loan from the banks and financial institution, what will happen to that? Think about this for this moment. And that's why I'm very concerned of what's going to happen in the next 2-3 weeks. Now, will historical pattern happen again? Now, we've seen this before, and apparently this is going viral in the market. So this is the Dow Jones average, which basically did a upside. They realized that when you have the resistance turn support, okay, area, and it goes up by 37%, usually there will be a pullback. So they did it again, and we have a very interesting impact. It's the same 37%, which means that if that's going to happen, there will be a pullback soon. So the traders are looking at a very crazy number. I believe that number will be somewhere around 48,000, okay? Now, of course, where we are at 50,000. So what do you think? Do you think that will happen? I'll let you decide, yeah? But for me as well, we're getting prepared for this. So all we're going to say is this, the patterns, the fundamental, the technical tell us a lot. So based on our own indicator, crazy 5% reversal, we suspect that we're going to see the Dow Jones coming down to this number, 47,985, okay? We suspect that this will happen, and we're quite comfortable with that. because you look across, you can see that there's a long tail here. So if traders going to go down, usually they'll whack it down to get the stop loss being traded. All right, so where are we right now? At 49,400 area. To drop down to this area is about another 2,500 points. I think it's a good lot of money. So one single trading plot will be about 2,500. All right, so try and look at this, guys. I'm not saying that it will definitely happen, but what not try and take a risk on here. Now, one thing to note, we believe that the NASDAQ will fall. And one of the reasons is because we believe that Bitcoin will come off. So the NASDAQ to come down to 24,031 is actually possible. The boys are selling. It's very clear, our indicator. So guys, be careful. Now, obviously, we have the Magnificent 7 selling down. Some people feel that there will be a recovery. There could be a technical support. Well, we'll see tomorrow and the next day. And we all know that this week is the Chinese New Year coming in, and we've seen this before in the past when during Chinese New Year period, the Americans, they either going to push the market all the way to the sky or they may destroy the market. There's something that we've seen before. I hope that this will not jinx it again. But the thing is this right now, the one chart that's going viral is that they did a little chart like this. They basically did a mirroring of 2022 stock crash. And of course, you can see Bitcoin back then was at 69,000. It came down by 52%. And there was a rally. And then after that, it crashed down to 17,000. Remember, that was just a few years ago. So now the thing is this, you see the highest level, they did the same 52% retracement. Oh my goodness, it stays exactly the same. And the crazy part of it is, it actually did a recovery, something similar. So now they're speculating that the market will fall to 29,000. Now, I don't think we'll see 29,000. I really don't think so. I think we will see somehow between where we are right now to maybe about the number that we mentioned, about 57,000, okay? I don't think we'll go down to 29,000. Maybe if you could go crazy, maybe to the near 50s, all right? But not 29. I don't think so, unless I'm totally wrong, yeah? But we all know that Michael Saylor is definitely very chill about this. He feels that everything is good, but in my projection is this, okay? So you look carefully right now. This is the chart of the strategy, the MicroStrategy counter versus the Bitcoin. So whenever Bitcoin goes down, the stock strategy always go down, right? When Bitcoin goes up, so the stock price. Okay, so we understand that. So if you look carefully right now, there's a very strong support here at about 105 for the strategy stock. Okay. Now, we talked about this 2 weeks ago. It really happened. And now the thing is this, I believe that this is going to push it down all the way to $70 because I feel that Bitcoin may go down to the low end at about 57,000, okay? So if Bitcoin do come down to 57,000 or below, then of course we will see the stock going down to about $70, okay? So guys, I'm not too sure how Michael Saylor see about this, but he was on CNBC recently. He said that we won't be selling Bitcoin, we'll be buying every quarter forever. You know, this is something very, very similar to what I saw in the movie before, where there's Robert Stern, and this guy was basically in the sharing session, and he said that they'll buy shares. You know, it's exactly the same thing. So all I can say is that we all know that this Michael Saylor or strategy owns about 700,000 pieces of Bitcoin. So if you think about this for a moment, if I want his Bitcoin, what can I do? He's all borrowed money, right? So you can think about this, yeah, in the conspiracy form. But all I can say is this: if Bitcoin fall, NASDAQ fall, the Magnificent 7 fall, the S&P will definitely follow, all right? So to me, it's in my opinion, okay, my own opinion, I believe that the Bitcoin will come down. Bitcoin will come down to about this point here. That is somewhere about 57,000, because we have seen it before that it happened. And of course, the NASDAQ will likely follow through and break down to 23,000 area. So the NASDAQ to drop to 23,000 or Bitcoin to hit 57,000, because you can see that the relationship between Bitcoin and NASDAQ has been quite interesting. They've been quite followed through, about the same. The peak is near the same. So there is a high chance to see Bitcoin coming down to 57,000. And then that will basically push the NASDAQ even lower. That is why when we saw this pretty interesting linkage between this person, I will not mention his name, with crypto, it is crazy because the moment it seems to be that, now the market is talking about he is actually the creator of Bitcoin. I don't believe in it, but it's just that some of the numbers, some of the facts seems crazy. But nonetheless itself, right? We believe that Bitcoin is going to come down. Okay. So guys, I leave it to decide. End of the day, you make your decision. My job is to share things with you. I hope you enjoyed this video. This is Hal signing off. Take care and hope that you make a lot of money today and next time. Bye-bye.